Welcome back to IMF World Bank Week at the Atlantic Council. This is our final event after a series of events starting Monday and going through Friday. 45 events we've hosted with central bank governors and finance ministers from around the world. Thank you for joining us throughout all of it. I'm Josh Lipsky, Chair of International Economics at the Atlantic Council, and I am honored to be joined, as is our tradition, by our team members, some of whom have worked to prepare this week and bring it to you so we can unpack the key findings and look ahead to the October annual meetings just 6 months away. Sitting with me are Sophia Bush, Alicia Changani, Jesse Yin, Assistant Directors at the GeoEconomics Center. Thank you all for the incredible work this week. Thank you for the tireless effort that has brought the IMF World Bank meetings to so many thousands of people who have engaged with us. Let's dig in to the key takeaways from the meetings. And Sophia, I want to talk with you about it. You focus on trade at the center. You've built the Trump Tariff Tracker, one of our most popular new databases, and of course trade was front and center of these meetings this week.
Yeah, so it was. Every single conversation we had this week, I feel, started out with some kind of discussion on trade, because even if you're not looking at trade on its own, you're talking about the economic volatility that's coming with it. You're talking about interest rates. You're talking about the dollar. So we were hearing this all week, and I think everyone's trying to get a sense of where things are going with negotiations. And I think one of the most important conversations I had on trade this week was when I had the chance to sit down with Emily Kilcrease and Peter Harrell. We had a conversation about this, and it was so good to get both of their takes, because Emily was saying that, you know, even if we hopefully do get some trade deals in the short term and the administration is able to have some success with that, and they do need to do it in the short term. She was talking about how there's a very small window to get that happening. The tariffs are probably going to stay. They might not be, you know, the full scale and intensity of the reciprocal tariffs that were announced on Liberation Day, but at least some tariffs are the baseline, except for what Peter said, if, you know, there's legal challenges. And that was kind of the main case that they both said for really having tariffs come off, even just temporarily. So I think that was some of the most interesting that I heard.
I had a similar takeaway on tariffs. It was reality setting in. I think everyone knew coming in these tariffs weren't going away anytime soon. But when you come here and everyone meets with their colleagues and you realize there's no easy way out. There might be some backtracking, there might be some de-escalation, but we're going to live with much higher tariff rates than we have certainly in the past several decades here in the United States. And you could just kind of feel that set in across the room. And then the question is what to do about it. So Alicia, let me turn to you. Digital currency was not front and center of the agenda, but we hosted several events on those issues here. If trade wars weren't dominating, I think it would have been higher on the agenda. But what did you find in your conversations and in your colleagues' conversations on fast payments and the future of money?
Yeah, I think, Josh, to make the point, when times are not so good, you can't talk about innovation and, you know, good things, opportunities to, you know, innovate and develop new systems. It's hard to talk about those things. We had the opportunity to meet privately with several people, central bank governors, but also, you know, finance ministries, to talk about what they're looking to innovate their payment system. On the US side, we all know that the US is no longer going to be doing a retail CBDC. I know this hurts me and Josh a lot that this is happening.
This is the reality.
But countries around the world are innovating their payment systems, and they may not, you know, be saying it during the IMF World Bank Week, but they are talking about it with us. Stablecoins were the big topic this week. Even our last meeting that we had today talked about stablecoins. I didn't imagine that was going to be our last meeting of the week.
Pleasant surprise, yeah.
But the challenge with stablecoins is they're versions of digital dollars. The US is coming out with some sort of regulatory framework with stablecoins, but the real risk is, do we just let these digital dollars proliferate around the world? And what does that mean for countries around the world who are trying to push their monetary policy to try to, you know, regulate their own economies? So that was a conversation. I'm sure stablecoins are going to be brought up in the United States, but all around the world in the future as well.
Yeah, you could feel it this week. People wanted to talk about areas of collaboration, areas where they can make progress. Financial technology is one of them. But then the reality of slower growth, the IMF downgrades, the trade wars just kept creeping into everyone's dominating conversations. Everyone was trying to grasp onto something positive. We'll see where we get in October. Jesse, I want to turn to you. This is your first time as a full-time staff member with us during the week. You helped to organize the entire week. Job incredibly well done. What were your impressions being inside here, the IMF, as the week progressed?
Yeah, so I'm new to the GeoEcon full-time staff in terms of helping to organize our programming. But I think these meetings have been unique more broadly. We've heard in a few of our events, both public and private, people calling back to historical comparisons, whether it's about the fact that the U.S. has the highest effective tariff rate that it's ever had, calling back to when China first joined the WTO and like this sort of history of market distortions. People are bringing up the Plaza Accord and whether like a modern currency agreement could be feasible. But it's just very rare that these leaders will come to DC for the IMF and the World Bank, and until halfway through the week, they don't really know where the U.S. is standing on these institutions. On Wednesday, when Treasury Secretary Bessent gave that speech, is when we sort of got a sense that there's going to be continued engagement, but a very different type of engagement, and sort of him reminding these institutions of their core missions and that they shouldn't bleed into other areas. And what does that actually mean in terms of what the IMF and the World Bank can do going into October?
Well, that was definitely one of the key moments of the week. I agree with you. Secretary Bessent's speech Wednesday, everyone at the IMF and the World Bank trying to interpret what it means for them. But Sophia, you've been through several of these. You're a veteran. The calls from Secretary Bessent aren't new. We've heard these complaints from the U.S. and others before about both the fund and the bank.
We have. I'd say we've also talked about it ourselves at the Atlantic Council. We have our Bretton Woods 2.0 project, which looks at, if these institutions are fit for a purpose, which was exactly what Secretary Bessent was talking about. And we've, done these sort of exercises looking at, okay, let's say the IMF and the World Bank didn't exist. What would we do? And usually what we've come away with from those exercises is that we would make something similar. And I feel like that's kind of, I would say that maybe Secretary Bessent would agree with that. He said that these institutions have critical missions, but they need to, go back to that, make them fit for purpose. And I think that's something that pretty much ring true with the work that we've done.
I agree. I think the challenge going forward is going to be, is the U.S. definition of what the core mandate is the same as the other 190 members? And that's really where the rubber is going to hit the road in the months ahead. Alicia, let me turn to you because the other issue, and Jesse alluded to this, was the dollar. We focus on this. You run the Dollar Dominance Monitor project. How did that play out over the week? We came in with a lot of concerns about the dollar, but there was kind of a nuanced conversation that played out here.
Yeah, I've never heard currency and dollar have been talked about so much in this IMF World Bank Week meeting than this week. Every question we were getting about what's the future of the dollar? Did you see the dollar hit the 3-year low? What's going on? And I think it is a very nuanced conversation because what Donald Trump did with the tariffs was a lot larger than markets and countries were prepared for. So we did see a negative reaction to the dollar. In my opinion, and I know you had your event with Saleha Mohsen, the biggest threat to the dollar, and this is what I think, is public trust in the dollar and trust in the U.S. institutions. 3 weeks are not enough time to tell you if the dollar is going to be the reserve currency or not be the reserve currency. I think we can give the dollar some credit. But I do think that if the U.S. continues this path and the institutions remain unstable, then we might have to, think about what the future of the dollar is going to look like. And I think that's going to be a conversation in the annual meetings as well.
I agree. That's a debate we're going to continue to have going forward here. So, Jesse, as we look ahead to the annual meeting, 6 months away in October, what are the key points you're thinking of as we should approach the next few months?
I'm thinking about the U.S. sort of pulling back from USAID and general international financial aid assistance was a big move, but there has been trend over the last few years of a lot of countries sort of stepping away from official development assistance. And so with that, plus the indebtedness of a lot of countries from the COVID pandemic, I think we can't forget about the constrained fiscal space that we now have for sort of recovering the development gains that we lost during the COVID-19 pandemic and the subsequent recession or disruptions, and also trying to still achieve the SDGs and seeing the sort of goals that we had set out. And also, just from a different perspective, I think people have been talking about whether China can step in and fill this US aid space. The sort of investment that the Belt and Road Initiative usually does is not the same as the type of humanitarian aid and human capacity building that USAID does. And so with China's own economy slowing down, I think just in general, we're going to be seeing a dearth in this sort of development financial assistance.
I think that's really well said. One thing I noticed this week and what you're picking up on is that the effects are already there. The effects of the cuts the U.S. has made, the effects of the trade wars. People are losing jobs. You heard emerging markets talk about how their economies are already suffering. So this is not theoretical anymore. It's not just downgrades on a piece of paper from the World Economic Outlook. People are suffering, and the question is how this is going to play out over the months ahead. And I really appreciate you bringing up the aid point, which is hitting people on the ground in real time. Alicia, over to you, because the future of international economic coordination is up for debate right now, and this is an area we focus on, including through the G20.
Yeah, I think something that's going to shape the annual meetings moving forward is how did the G20 meetings look like this year? South Africa has the presidency, but then it goes to the United States. I think how the United States participates in this G20, and we're already seeing some hints of, how they want to participate, will shape a lot of the conversations that happen in the annual meetings. What does international cooperation look like? If they can engage in the G20, what are the goals that we're setting in the G20 and how will those shape the annual meetings? Actually, in October, the Kazan summit, the BRICS summit was happening right here while we were sitting.
Yeah.
I don't hear a lot about BRICS this meeting.
No, it's been quiet about BRICS, you're right.
The BRICS have already said that they're going to have their sort of summit between February and July, some summit that's going to be happening, but that's the other side of the pond that's growing their cooperation. We'll see what happens there. It's been quiet. We predicted this when we were doing the dollar dominance monitor, that the BRICS countries would stay a bit quiet because they were worried about the tariffs that you brought up, Sophia. But who knows what the BRICS countries are going to be doing and what they're planning in the future. All of these sort of multilateral organizations coming together can really, really shape what we're going to talk about in October.
That's what's so strange to me, because these institutions, the Bretton Woods institutions, are about multilateral economic engagement. But what people are dealing with, Sophia, as you pointed out, and as we felt throughout the week, is bilateral trade negotiations. And so you have this kind of contradiction in terms of what these institutions are supposed to do versus what the ministers are in town thinking about doing. Sophia, we're going to come to the annual meetings in October. Then we'll be a year away from the next annual meetings, which will be in Thailand. So we'll worry about that later. But these next ones will be in Washington. What is the world going to look like when we approach those from trade and from the other macroeconomic headwinds that are coming?
I really liked what Alicia said about 3 weeks is not enough to see what the future of the dollar is going to be. And I also think 90 days isn't enough to see what the future of U.S. trade policy is going to be. And so I think by the annual meetings, we will have a better sense, and I think that'll be a major thing to look for. But I think it's almost not even as much about the bilateral relationships as it is about the bilateral relationship between the U.S. and China.
I can't believe we went through the whole conversation without referencing China.
Well, that's on you, Josh. You're the moderator.
I mentioned it.
Okay, yeah.
That's 2 knocks on the moderator, I think,
BRICS
5
has
seconds.
China in it as well.
Okay, 3 knocks on the moderator. Go ahead, Sophia. It's been a long week.
Yeah. So I think U.S.-China tariffs.
Okay, fair enough, but let me push you on it. Moderator's prerogative. So, agree, U.S.-China tariffs. But what are we really looking for here? Is the de-escalation realistic? 100% plus tariffs on each country? We heard so much from the White House this week on the back and forth. I couldn't keep track of it because we were running between so many events. I don't even know where it stands right now. What do you think is a realistic outcome, at least in the near term?
Yeah, I think it would be beneficial for both of these economies to get tariffs lower. It's not going to go back to where it was,
That's
though.
the bottom line.
And I think we expected that. We talked at the beginning of this year when we were talking about what we would see in the year ahead, and we agreed that it would be higher tariffs.
Yeah.
And that was kind of the baseline of what we were predicting. Did we think it would be this high? Maybe not, but
Fair enough. Nor did I think many of the ministers and governors here.
I think that they will stay, but I think It's going to hopefully we'll see more carve-outs, more exemptions, more looking at, okay, what are the critical inputs that we actually need to make sure stay exempt? And maybe with a little bit more granularity into U.S. supply chains, we'll get more lenient tariff policies.
Thank you, Sophia, Alicia, Jesse. I want to thank you for the incredible work you've done throughout the week to bring these meetings to so many people. This really is the future Bretton Woods sitting at this table, and I'm grateful to you on behalf of the entire Atlantic Council. I want to say something before we close today. The US dollar has been the global reserve currency for approximately a century. And we can sit here as we did this week and talk about all the macroeconomic factors of why that is. Liquidity and capital markets and all the ins and outs that make something a reserve currency or not. But the fundamental reason something becomes a reserve currency, the world's leading experts on currency will tell you, including at the Atlantic Council, is the rule of law. But another way to say that is trust. Trust that fundamentally you will be treated fairly, there will be a process if there's a dispute, that you understand the system, how it works and how it doesn't. That trust was hard fought for and hard won by the United States. We often romanticize the 3 weeks in New Hampshire in 1944 as when the world came together and set out a new international economic order and created the dollar as the global reserve currency. But the truth is much more complicated. There was wrangling and backstabbing and negotiation and suspicion, countries not wanting to deal with each other, bilateral negotiations just like we see this week. And what emerged from that meeting was not a consensus. It was a precarious and tenuous agreement to see if the United States, as the leader of an international economic system, could earn the trust of the world. And they did it. The United States did something that no superpower in the history of the world had ever done before. They shared their power. They built a rules-based international system. And that system benefited the world, but it also benefited the United States. It generated enormous prosperity in this country. We overlook that history at our own peril. Are there deep flaws in that system? Of course there are. Have they built up, especially in the past 20, 30 years, to the detriment of American workers and workers around the world in advanced economies? There is no doubt. Is reform needed? Of course. There is absolute unity across the IMF and World Bank about the need for reform. But those who seek to deconstruct a system that was built over nearly a century have an obligation to share the vision of what comes next. This world that we have built, this economic order, is imperfect. But it represents the consensus of the citizens of the countries that these ministers and governors represent. And the brilliance of this system is that every country has a voice. And working together, they build a stronger global economy. We may have forgotten those lessons as a century has moved on. And it may be painful for all of us as we seek to relearn them. But we have to come out of the other end of this, not just in a bilateral world the way we operated before the Bretton Woods system, but a way that shows we have learned and not forgotten the lessons of history. That is what we will be committed to at the Atlantic Council, and that is what we will continue to work on in the days, weeks, and months ahead. I want to thank everyone across the Atlantic Council who has worked so hard over the past few months to bring you these meetings. Our editorial team, our media team, our GeoEconomics Center, our AV team. There are literally hundreds of people who have worked tirelessly behind the scenes day and night so we could bring what was happening in the global economic system to you because it matters. It matters to everyone's lives and it matters to our futures. I am grateful to them, and my commitment is that we will be back here in October for the annual meetings, and before then, you can continue to follow all our work at the Atlantic Council. We wish everyone a pleasant rest of the day, a good weekend, and thank you for being with us this week.